welcome to Business Morning right here on Channels Television. It's still the first trading week of November. We're still tracking things that's playing out right there in the FX market, the equities market, the oil market, and all markets that we track at this point. Let's give you the top stories that we're tracking right now. We're seeing the, oil, that's down again. This starting this trading morning there. We're seeing oil down, but let's start off with Nigeria stock market, 0.72%. That's the latest drop from yesterday, 152,629 points, losing that 154,000 level. Equity cap, 89 trillion, no more 90, losing about 612 billion naira. That's the play yesterday. So it's still profit taking. We've had different perspectives on why the market is dropping, even though we had a negative drop. That's for the negative performance for the market last week. Friday, that was positive. But fast forward to, after the weekend, happenings over the weekend with, the Trump threat. We kicked off Monday in the red, and now Tuesday also in the red. Some say it's because of profit taking, we're expecting December. Some say it's the capital gains coming 1st of January 2026. We'll find out, at some point. Let's get a check on what played out with the trading activity for yesterday. Stronger, showing, bearish sentiment. We're seeing volume. That was up by 8.99%. Value, 20.37 billion naira. That was the value of trades yesterday. Deals lower than the previous day, right there. All right, let's get a check on other parts now. Let's see the sectoral performance right there. Let's see if financial services were able to hold on. Okay, for top trades, asset savings, again, top trades, 111.95 million units traded. FCMB, financial services, Fidelity Bank, financial services, 55.13 billion. So that's the picture right there for trade yesterday. We'll give you more updates for the intraday trade at 1:30. Let's look at some earnings now. Yes, it's still earnings season, by the way. It's still earnings season, and we see a stellar display of performance. BUA Foods PLC reported a pre-tax profit, 156 billion naira for the third quarter of 2025, nearly double the 78.46 billion achieved in the same period last year. This surge was underpinned by revenue growth of 28% in Q3, bringing the 9-month pre-tax profit 433 billion naira. That's a 101% rise compared to the same 9-month span in 2024. So that's it there. That's the latest one. We did get the news that this is one of the most capitalized stocks right now on Nigeria's stock market. Revenue, 34% up year on year. Cost of sales, we see that's up 15.5% right there, according to the latest data from the NGX. So, we keep tracking, these earnings, as they come out, and see how investors react when we see the trade for that stock there. All right, let's flip over to the oil market now. Big drop, 0.9%. Price, $64.38 per barrel. That's for Brent crude. And WTI still holding on to $60 as of this morning, 0.10% down. So we're still seeing that weakness right there in the oil market and the range trade there. And it's still geopolitics and expectations for oil demand, going forward. We're seeing OPEC there, cutting supply into the market and also giving projections of what to expect in the oil market, and that's driving sentiment right there. All right, let's bring it back home now. We see for the NNPCL, the Group Chief Executive Officer of the Nigerian Petroleum Company Limited, Abayo Ojulari, has recommended bold global partnerships and investments to end the phenomenon of energy poverty across Africa. He made the call at the Energy Talk session of the ongoing Abu Dhabi International Petroleum Exhibition and Conference, as ADIPEC 2025 in the United Arab Emirates. Mr. Ojulari explained that the NNPCL has raised Nigeria's oil output to 1.7 million barrels per day, with targets of 2 million by 2027 and 3 million in the long term, a growth that is driven by redefined relationships with IOCs and independents. And away from oil now, the federal government has secured a $500 million loan facility from the World Bank to boost growth across Nigeria's agricultural value chains, a move aligned with President Bola Ahmed Tinubu's renewed hope agenda for food security and rural industrialization. According to the Ministry of Agriculture and Food Security, the loan will help strengthen smallholder farming and enhance connectivity across the agricultural ecosystem. The Minister of Agriculture, Senator Abubakar Kyari, disclosed this during a meeting with World Bank delegation led by Hardwick Ngale, head of agriculture value chains for the growth project right there. So we're seeing food security right there on the front burner. All right, to tax now. President Bola Tinubu has appointed Mr. John Nwabweze as the tax ombudsman or tax compliance watchdog in accordance with the provisions of Nigeria's Joint Revenue Board Act 2025. A statement from the presidency says his appointment aligns with the federal government's commitment to implement far-reaching and sustainable reforms in the tax and revenue administration framework. Prior to his appointment, Mr. John Nwabweze served as managing partner of a reputable tax advisory firm, technical advisor to the Joint Senate Committees on Federal Capital Territory and Finance of the National Assembly, and technical advisor to the Chief Economic Advisor to former President Olusegun Obasanjo, among other significant public and private sector engagement. So that's a new tax ombudsman right there. All right, so other matters now. The France-Nigerian Chamber of Commerce and Industry, they've commended the upcoming tax regime by the Tinubu administration, saying it will eliminate multiple taxation for diaspora business owners in the country. Director General of the Chamber, Moses Umoru, says the Nigerian business community outside the country is looking forward to its start, as they believe it will make it easier to do business in Nigeria and build investor confidence in the country. Take a listen.
Over the years, what we have had is that there has been what we call a duplicity of taxes in Nigeria. It's called multiple taxation, and most businesses, international businesses, multilaterals have had an issue with because there is no clarity. There's something about risk. Risk is shy and hates uncertainty. So when there's uncertainty in the Nigerian business environment, the potency for foreign direct investment becomes very, very less. What Taiwo Oyedele's committee has done right now is that he has shrinked that number of close to 60, more than 60, 17 tax, and we're having less than 10. What that has done is that because I was in France during Vivatech in the course of the year, and most international investors are very, very happy with the reforms in tax. The reforms are going to bite those on the upper end, definitely. But what it does is that it creates clarity in the Nigerian business environment. So if foreign investors are coming to the Nigerian business environment right now, they are coming with clarity and they can be able to know exactly what they need to do to be able to set up shop in Nigeria. So I think that's one thing that we are picking out, and that's one positive from the reform so far.
All right, as the world gears up for COP30 in Brazil, Lagos State, Africa's largest subnational economy, is positioning itself as a leading model for climate action and sustainable growth on the continent through the Office of Climate Change and Circular Economy. Lagos is advancing innovative, inclusive, and finance-driven initiatives that bridge local realities with global climate ambitions. The state's participation of COP30 underscores its commitment to driving tangible, scalable solutions for urban resilience, clean energy, and green finance. Well, joining us now for this conversation, we have Mrs. Tisilayo Oshodi. She's the Special Advisor on Climate Change and Circular Economy to Lagos State Governor. She's joining me right there from Brazil. Good morning, ma. Great to have you.
Hola, good morning.
Fantastic. How's the weather over there in Brazil?
It's very warm. You know, the temperature is mild, a bit of wind and droplets here and there, but it's nice. It's a real tourist delight.
Fantastic. So no extreme weather right there, even though we're talking about climate change at this point. So, Mrs. Oshodi, we see Lagos is one of the few African subnational governments with an official presence at COP30. Why is this important, and what will Lagos be showcasing?
Well, Lagos is Africa's largest city, and it's a microcosm of the continent's climate reality. You know, we have it's ranging from energy access to transport and food systems. So at COP30, we're not just going to be talking about ambition, we're going to be showing implementation. Lagos will be presenting real, scalable, sustainable models. The bride in the room is the 80 million clean cook stove initiative, which is the world's largest Article 6.4 approved clean energy project. We also have e-mobility programs that are going to be demonstrated and showcased by our Lagos Metropolitan Transport Agency, Lamata. We're going to also be expressing climate smart agriculture solutions from the Ministry of Agriculture because projects and models of turning waste to biogas, to clean energy is also on our plate. And of course, within that clean energy space, the Lagos State Parking Authority also will be showcasing one of the climate resilient solutions that is proposed to be installed across Ibile Division. So these are climate resilient program of activities that validates our framework within circular economy and climate action plan. And they're not just policy documents, but there are investment pipelines. So we're positioning Lagos as Africa's subnational hub for green innovation and for finance.
Right, and definitely we keep talking about how recently we're talking about how states, some states, in Nigeria, are able to, fund their activities without relying heavily, on facts. So funding is critical. At this point. Talk to me about, private sector collaboration and, financing, especially collaboration for financing, that we're seeing right now.
You are spot on right there. Funding is really, really very critical. And the public-private partnership is at the heart of Lagos climate success. You will agree that the administration of Governor Babajide Sanwo-Olu prides itself on this interdepartmental, interrelational, interministerial deliverable. So the government alone cannot finance the green transition. We have to establish partnerships, and we have, as we go towards our COP Lagos Focus Day, partnerships with the Wando Clean Energy, Green Plains Africa, Lekki Free Zone. We're demonstrating how to de-risk investment and mobilize capital for city-level projects. These are the alliances that we're creating, and we're expanding them, so that we're able to create green jobs. We're able to unlock the carbon finance that is inherent in the nature and the, water resources that Lagos is, predominantly sitting within. And we're proving that climate action can only drive economic growth. We have empirical data. And the 8 million clean cook stove, which Lagos will be anchoring, is being distributed across households where we're generating good financial projects, as we had already piloted about 20 in Makoko, generating 15 tons. We're monetizing carbon credits, we're reducing emission, we're improving indoor air quality, and all of these involvements with ministries, the agriculture, the construction sector, are circularizing waste, for briquettes for the fueling of this clean cook stove. So we're very, very optimistic towards optimizing growth stimulation. We're very optimistic about the project investment in itself. We're looking at a projection of about 35 million jobs to be created. So PPP is definitely the way to go.
All right, let's look at some of the narratives now. We've heard that argument that when it comes to transition, Africa needs a just transition, and definitely we've heard the developed economies and countries, they have done more harm to the climate than we have, and we need a just transition. So what message will Lagos be taking to this meeting at this point, and by extension, Nigeria?
Well, our mandate is simple in Lagos, and it is clear. We're building a climate smart economy that creates jobs, that unlocks capital and protects the most vulnerable. You have said it, that we're the most impacted. We're bearing the brunt of the industrialized economies, but in the spirit of just transition, we have to customize and we have to localize our solutions, taking in from a nuanced perspective what would be most desirable, what would be most appropriate, and what would be most convenient and comfortable and affordable as well. And the message is clear, local action delivers global impact. Lagos is proving that Africa's solutions are not theoretical. They're already being implemented, and they can be scaled, with the right financing. And we understand that, the global capital is shifting and investors want purpose and profit. Our ESG compliance is no longer optional. It is a market demand. So Lagos is responding. Lagos is responding with ESG integrated project design. We're responding with SDG aligned impact metrics. We're putting regulatory clarity in place. We want to be reform-minded. We want to drive a leadership that is minded about the communities. We're community-centric. We're community-focused. So this is how we want to start to invite our global partners. We want them to understand that, this is more about the communities, and we need to listen. We need to understand their needs and how we can, dimension and unpack their solutions, as it is suitable for them. So we're inviting global partners, all the DFIs, the investors, the philanthropies, to join us in turning our commitments into capital and innovation into impact. And, from Lagos to the world, this is how we want to be able to finance Africa's green transition.
Right, and talking about this transition, we try to use cleaner alternatives for cooking. And right now in Lagos, we know the price of cooking gas is really expensive, and there's a risk that would make the vulnerable side of the community look at dirtier alternatives for cooking. If cooking gas gets really expensive, and there's also that scare that it might even get scarce at some point. So is this a risk for Lagos State aligning, with the climate agenda, little issues, like that we see with expensive, cleaner alternatives?
Well, it is not the plan, within the just transition to make clean energy more expensive. It has to be affordable. This is one of the areas that we're essentially beginning to focus on. We know that clean energy will talk about electrification, but it would also talk about clean cooking. And that's why we're excited about the Clean Cook Stove, the 80 million Clean Cook Stove initiative. Targeted towards the woman. It is targeted towards the vulnerable community. If people have to live, they have to eat. And through cooking, there's so many other program of activities that will be unfolded, that would be beneficial for the community. From the 20 pilots that we have already extended towards the communities in Makoko, we can see clearly that our kitchen performance test is bringing the right numbers, the data that we need to be able to measure nuance, to be able to measure social equity, to be able to measure economic development, because these women, not only do they now have a bit more time to be able to look into other things and even generate some form of entrepreneurial journey in their homes. They have reduced inhalation, bad inhalation is reduced in their homes. They feel a lot more sense of worth, and they are also beginning to work towards relating with one another to help each other. So it's almost like the stove in each home is becoming the nexus for interrelativity, the nexus for economic growth, and most importantly, even for better health trajectory. So we're very, very hopeful. We're very, very pumped and excited about the opportunities that this will unfold. All that we need right now is to be able to have a hands-on, positioning with the necessary investment partners to take this to the next level.
Right, we need that investment, definitely. But can you share some examples of, flagship projects under the OCCE that are already making an impact on communities?
Well, one of the flagship ones that we always pride ourselves in is the Eco-Circulate. And it's a waste valorization business development program that is driven from community to community. We have piloted about 5 communities right now. Ayobo, we've done Badagry, we've done Trade Fair, we've gone Shangotedo, and they are simulative tests, to help us to get the communities interact directly with their waste, and also help them to see what sort of value that is inherent in keeping and hoarding their waste rather than discarding them irresponsibly. We also use that to develop access to market for business entrepreneurs who are within the green sustainably linked space. So waste collectors, fashion and textile upcyclers, electronic waste people, all have a chance to be able to interface with the communities. And at the end of the day, when we're done, we try to institute those waste collectors in the spaces by establishing a collection hub. It's another space where investors can play as well, because each community, each local government across the BUA divisions have waste generating on a daily basis. It's a household of about 3 tons on a daily basis in Lagos. We're still underutilized in terms of waste management. We're not optimizing as much as we can. So we want to give the control back to the household rather than drop that waste on the road that will end up in the gutter or on the dump site. You can actually retain them, have them sorted, and also have them exchanged either for cash or for any of the mandates or the social amenities that the ministries within Lagos State effectively discharge. So we're very, very proud of Eco-Circulate. We have another program that is called the Leave No One Behind, and it's a waste to clean energy biogas program, and we had that instituted, we had that run with the correctional facility in Idiaraba. These are also areas where we would like to replicate across the divisions, across the state, across the metropolis, because not only were we able to establish a waste to energy, a waste to biogas with the kitchen, we were also able to establish a climate smart agriculture organic growth within those spaces. So these are facilities that replicate the sort of model that we can run even within organic, within estates, across Lagos State. So we have Leave No One Behind. Even in our Lausa in itself, we have a collection hub already that is already generating a revenue both for the collectors and also for the civil servants within the space. So there's so many areas that we can begin to look at green economy, touch lives, through the pocket, operationalize the ideals of circular economy, and establish sort of financing that we need to be able to take us to the next level in Lagos and ultimately for Nigeria. We're happy the country has already established a framework, a carbon framework, and that's definitely something in the right direction, a step in the right direction, and we're really, really excited about the green finance that it proposes for us.
Yeah, it's quite interesting because, driving around Lagos, I noticed, young guys, picking all those bottles and, putting in their pack there. I guess they're going to exchange that for cash, somewhere. But, talk to me about, the kind of support or outcomes, Lagos is hoping to secure from international partners and financiers at COP30. We'd already,
expressed that handshake. We're very, very intentional about opening up the space. We're very, very intentional about the sort of financial structure that is unique for us. we need to take into so many factors, from behavioral to customs to language to the level, the type, and the style of communication. These are risk factors that must be engaged, within an investment portfolio. And even now, with the meetings and the engagements that I've had for the past 2 days at the local leaders forum, it is clear that for Africa, the work, the trajectory, the models have to be customized. They have to be localized, to help us. And there's so many, because we're so community driven. We are very relational in our behavior. The styles of financing has to incorporate, it has to integrate into that space where you can help each other to build each other up. So the local leaders forum, the past 2 days, today is the third day, is definitely the right tool. It's definitely the right pathway for us to be able to understand how to make Africa work for Africa, and also how to introspectively and internally generate revenue by ourselves. We don't all the time have to go to the global north. Yes, there's a role, but I think that there's also that role, a place where we have to start and build to an extent. And we have organizations and banks like the AFDB, who is also proactively pushing out, projects that are designed for the African economy, because they understand what this is about. So we're on the path, and work is ongoing, and we're very, very hopeful that before we get to a point where the inaction is going to cost us a lot of money, we will be tipping things, we will be making things work.
Fantastic. And definitely it's countdown to COP30 at this point. Thank you so much for bringing us up to speed. And definitely we hope you have a great outing out there. Mrs. Titilayo Oshodi is a special advisor on climate change and circular economy to the Lagos State Governor. Thank you so much for coming on today, man.
Thank you for having me. Have a good day.
All right, we'll take a break now. When we come back, we get a check on the latest Eurobond offering by the federal government. That's the moment to stay with us. Nigeria has expanded its footprint in the global debt market, with the federal government planning to issue a new international sukuk, even as it also conducts an NTB auction and also the issuance of a fresh Eurobond today, about $2.2 billion. The move signals a broader strategy to diversify funding sources and strengthen Nigeria's fiscal debt management framework in line with ongoing economic reforms. Join us now to discuss. We have Akpero Putu, a chief dealer at Lotus Bank. Great to have you on the show. Good morning.
Thank you for having us on the program, Ladi.
Fantastic. So talk to me about this strategic objective here. Nigeria is hoping to achieve by issuing an international sukuk bond. That's in the offing at this point. But today, we've issued a new Euro bond. That's about $2.2 billion. Talk to us about what's playing out so far.
Okay, so we had news recently today that they're going to issue the Eurobond. It's about $2.2 billion, and that's actually it's very good for investors, because we expect that the yields are actually going to close really high, around 9%, and this will actually put some calmness in the market and boost investor confidence. We expect that the Eurobond will be around around. There are 2 issuances actually on this Eurobond paper. It's going to be a 10 years and a 20-year paper. So we expect that the 10-year paper will hover around 9%. So we'll start seeing foreign investors bring funds into the market, and local players actually will also invest in the paper. So we expect that this will be oversubscribed. And we know we've had a lot of news from the U.S. economy on the Trump saying, putting Nigeria out there as a country of concern. And that's what we actually want to be on the lookout, how that's those talks will actually affect this paper today. So we're actually looking out to see what will happen in the markets with this issuance.
Because I remember seeing news that Eurobond price actually tumbled on that news. And now we're issuing another one at this point. I guess we'll be looking out for what plays out there. But how does this move fit with within Nigeria's broader debt management and fiscal reform agenda?
So the country actually have a budget deficit, and that's the reason that at this time they've decided to come up with this Eurobond issuance. So about $2.2 billion will actually help us in our budget deficit. We know we've constantly followed up and looked at the reserve. We've seen growing reserve. We're about 42 billion stable FX reserve. So despite the fact that we're trying to do this at the moment, the economy has been really stable in terms of FCY liquidities. We have a lot of flows coming out from the different countries into Nigeria. And with Nigeria being removed from the grey list, that actually caused more inflows to come into the country. So this has actually been in the budget. So, and that's one of the reasons why we're still going ahead to issue the Eurobond paper.
All right. So what are we seeing for this, the plan for the international sukuk offering there? How might, the current global Islamic capital market environment, that's, talking about rates, liquidity, how will it influence demand for an Nigerian international sukuk?
So this will be the first time that the country is going to raise a Sharia compliant FCY paper, which is the sukuk. So we expect $500 million to be raised subsequently, sometime between now and the end of November. So it's actually good for the country. We have other papers where Nigerians actually invest in. So there's the International Islamic Liquidity Management Sukuk, or paper which holds the various currencies, sukuk from Malaysia, from Dubai, and so many other countries. So this will be a very good one for Africa as a whole and for Nigeria, because it will be the first time you will get the Sharia compliant paper to be out there for local investors to play in. And we know in the international space, the rates for the international FCY sukuk bond hovers around 4%. So with Nigeria issuing a paper, their first of its kind, and with the rates that we're looking at for that paper, we will see investors come into the market and actually play in our local space. And it will be very good for the economy. And we expect that this bond paper will be oversubscribed as well. It's a good trajectory for us as a country.
Right. And still looking at the international sukuk offering, what are the likely target investors here? Is it Middle East, Islamic funds, Southeast Asia? What are you expecting?
So for us now, we're looking at the local players. We're looking at Nigerians in diaspora. We're also looking at the Asian communities. We're looking at the Arab communities. Like I said, the instruments, we expect it to be higher than what is currently sourced in the market. So with the attractive rates that the government is trying to issue, we'll see investors actually come into the market and play. They've actually been approaching banks. We've seen Arab nations or countries approaching banks to see where they can place excess liquidity. And with this for the federal government, it will be a successful bond issuance. So we'll see foreign investors that play in that market.
How might the sukuk price, relative to Nigeria's, outstanding euro bonds, how will it be comparable to the sovereign sukuk?
So for now, we've seen sukuk, other euro bonds hover around 8% on the 10-year paper. And with what we're looking at for the euro bond that is going to be issued, we expect that it will go above 8% level. So we're looking at 9%. We expect that the new sukuk that will be issued, the first of its kind, would also hover around the same levels, because we have these investors in both the local players who are willing to invest both in Sharia compliant instruments and in other conventional bonds. So we don't expect that the rates will be far from each other, and that will actually attract these foreign investors that we're trying to bring to play in our local market. It will boost confidence when we issue this paper at attractive yields higher than what investors can find in the other Arab or Asian markets. So it'll be good for us.
All right. So what indicators should analysts monitor post issuance? Yield movements, FX stability. What should we be looking at post issuance?
So we expect that the tenors of the new sukuk would be around what we can find in the market. Some players are looking for short-term instruments to play in, so we expect that the sukuk would be between up to 5 years, so which is actually short for the international sukuk. So we see, so post the sukuk issuance, we expect to see good rates, we expect to see good yield, we expect to see residents and diaspora residents bring in floats into the market, which is what this administration has been trying to do since the establishment, trying to see how we can get our friends, our partners who are in foreign countries to be able to invest locally in Nigeria, to grow our reserves, to grow the country's resources. And I think that's what investors.
Right, what do you think, we should be doing right now, that's from the government side of things, to make sure that, these offerings actually, have the right demand, going forward? What should we do to manage, the narratives, around the country to make sure that, we have success with most of these offerings?
So what I think the federal government should do, and what I think the president is currently doing, trying to boost confidence in Nigeria in foreign investors, trying to show how healthy the market is, trying to prove transparency, also very important in the fixed income market, in the FX market. When we see the borrowings, we actually see what these funds are being utilized for, especially for the sukuk. There has to be an underlying asset with which the federal government hope to invest this fund. So we actually need to see what this capital that has been raised are being utilized for. So that will actually boost confidence in the Nigerian economy. And we need to continue to speak well about the administration. We need to be out there saying what is actually happening in the market. Like I mentioned, on our reserve, we've grown consistently, and that has been boost to the trading platform, to foreign investors coming to the market. We see a lot of OMO issuance by the central bank, bringing out attractive yields as well, trying to encourage the foreign investors to play in the market, which is very good. And Nigeria being out of the grey list, so we'll expect to see other countries who have not been playing in our markets. We will help to see those investors actually come into the market at the moment, and which is very good for us.
Right, and I know with the domestic sukuk, we see those banners there on the road. So I'm wondering what we're going to see with this international sukuk.
Okay, so for the international sukuk, I would expect that some of the underlying assets will be mineral resources, things like gold, Nigerian investing in all the other assets that are yielding good return. We've actually seen how these minerals have appreciated over time. So it's actually good for the country to diversify some of its debt, its investment into this natural mineral resource, which is good for the country. So it's not just going to be local construction or infrastructure right now. So we're going to be among the big players playing out outside in the global market, investing in other items that are Sharia compliant. It's very good for us as a country.
All right, I'll definitely be looking out for what those banners I will say. Thank you so much. It was great having you on the show. Akwere Okutu, she's a chief dealer at Lotus Bank. Thank you so much.
Thank you, Daddy.
All right, let's look at trade now. The Nigeria Customs Service and the Continental Free Trade Area Secretariat have renewed commitments towards strengthening the implementation of the Pact for the Prosperity of Nigerians. The Comptroller General of Nigeria Customs Service, Mr. Adewale Adeni, and the Secretary General of the Africa Continental Free Trade Area, Mr. Wamkele Mene, they gave the assurance at a meeting in Accra, Ghana. They explained that the Customs Service, the government, as well as members of the private sector remain at the core of making the policy work for the good of its people. Take a listen.
Good to see you.
Nice to see you.
Welcome.
Thank you so very much for having us.
The Controller General of the Nigeria Customs Service, Mr. Adewale Adeni, leads the Nigerian delegation to this meeting with the Secretary General of the Africa Continental Free Trade Area to discuss how the Nigeria Customs Service can help facilitate trade under the agreement.
I thought it was just...
After the meeting, both officials speak on the benefits of the sector and how the deployment of technology, efficient payment system, as well as stronger collaborations can help enhance trade on the continent.
The issue of deficiencies in our trade data across the continent, this is a challenge that I have accepted to play working with other colleagues. And secondly, the existing structure which the Secretariat has created, bringing together all heads of customs administration, also needed to be strengthened.
We have committed that we're going to work together to where there are things within our mandate to immediately deal with those challenges within our mandate.
The African Continental Free Trade Area AFCFTA agreement has made significant progress since its inception, with several achievements ongoing. The agreement targets the elimination of tariffs on 90% of goods between 5 and 10 years, increased market access, deepening digital trade through the Pan-African Payment Settlement System, amongst others. The Nigeria Customs Service is promising to leverage its latest interventions to boost trade under the platform.
When we started the Authorized Economic Operator Program, we make sure that we admitted quite a number of them, because AEO is about managing compliance. And we want to say that as the companies are still very, very small, we want them to really imbibe the spirit of compliance, so that when they scale up, it will be easier for us to manage their bigger volume.
Besides the visit to the Africa Continental Free Trade Area Secretariat, the Controller General of the Nigeria Customs Service also pays a courtesy visit to his Ghanaian counterpart. The idea is to strengthen ties and improve trade between the two countries.
Together, we know that we must strengthen intelligence sharing and then also enhance joint operations against national crimes. We must also harmonize customs procedures to support the African Continental Free Trade Area, and then deepen capacity building initiatives that empower our officers to serve with integrity and excellence.
Overall, the agreement has shown promise in promoting intra-African trade and economic integration. However, these stakeholders are calling for sustained collaboration to address the existing challenges to ensure its full potential is realized.
right, let's get a check on what's playing out in the global side of things. And we have Ini John McCraw with the details. Good to have you, Ini. Good morning.
Good morning, Laddie. Let's go straight to what's happening in the global space. We see S&P Global Asia sector PMI data be revealed. Remember, on Monday, we did tell you those data that we're expecting for this week. A lot of them came out today, a lot of PMI for mostly the Asian countries and Europe. So for Asia sector, it was revealed that 15 out of 18 tracked Asian sectors recorded output growth in October. That marks the highest number of expanding sectors since March, and banking led the upturn, experiencing its most rapid increase in activity in 5 years. Insurance also saw sharp growth, securing third place in the rankings, while real estate maintained modest growth. This strong performance allowed the financials category to reclaim the top position at the broader industry level. For the first time since February, healthcare rebounded strongly in October, ranking second among broad categories. The sector data showed renewed growth in healthcare services activity and improved performance in pharmaceuticals and biotechnology. Basic materials also experienced a renewed rise in production, driven by fresh expansions in the chemicals and forestry as well as paper products sectors, alongside a milder decline in metals and mining production. And machinery and equipment output also grew. New orders expanded in only 12 of the 18 monitored sectors, indicating softening demand conditions. The employment picture remained mixed, with job creation reported in just 9 sectors. Looking ahead, while all 18 tracked sectors anticipate output growth, 11 saw confidence levels weakened compared to what they had in September. And Hong Kong SAR's private sector business conditions improved at the strongest rate since November 2024. This is still according to S&P Global. That was released today. The headline purchasing managers index rose 51.2 in October from 50.4 in September, marking the third consecutive month of improvement in business conditions. New order inflows increased for the first time in 9 months, driven by improved client confidence and stronger demand across local markets and mainland China. New orders from mainland China expanded for the first time in 1 year, helping to offset weaker demand across international markets. The rate of output growth reached a 1-year high as higher overall sales led to sustained upturn in production. And in Indonesia, the economic decelerated slightly in the third quarter. That's according to official data. This highlights a challenge of the government to boost growth to 8% by 2029. Growth slowed in Indonesia to 5.04%. That's for the third quarter, and is coming from 5.12% in the second quarter. That means that the fourth quarter will be key if the country is to meet its full-year target of 5.2% and carry that momentum into the next year, 2026, which also has a goal of 5.4% growth for that country. Growth in household spending, which makes up over half of Indonesia's gross domestic product, it cooled slightly to 4.89 in the third quarter from 4.97 in the previous quarter, while manufacturing, agriculture, and trade contributed to the third quarter growth. Mining, a key sector in resource-rich Indonesia, experienced a contraction for the third quarter of this year. From Indonesia to Singapore, the PMI there hit 14-month high as business activity accelerates. The private sector expanded its fastest in 14 months. That's for October. According to S&P Global, the latest reading marked the 9th consecutive month above the 50 threshold that separates growth from contraction. New orders increased at the sharpest rate in 13 months. Companies responded to higher demand by increasing purchasing activity, which contributed to the strongest expansion in stocks of purchases. So a lot of data that we have in Ireland. We also have the PMI services, PMI also there. It grew at the fastest pace of 2025 in October, with the AIB Ireland Services Business Activity Index rising to 56.7 all the way from 53.5 in September. A huge move we see there month on month. And this latest PMI survey shows a marked acceleration in growth among service providers at the start of the fourth quarter. Both business activity and new orders increased at much sharper rates than in September. Technology, media and telecom sector, they continue their strongest increase, leading to that huge move that we see in Singapore. In Poland, another good news coming the way from Poland. The central bank will deliver its 5th interest rate cut of the year, the 5th one, after inflation unexpectedly eased to its lowest level since the middle of last year. Several policymakers have signaled a possible pause in monetary easing going into the meeting today. We're expecting that announcement today. But I mean, the 5th time, that's a great one. Let's end in the United States. The Supreme Court today, they are due to hear argument over the legality of Donald Trump's sweeping tariffs in a case with implications for the global economy that marks a major test of the Republican president's powers and willingness of the justices to let him push the limits of his authority. The arguments are set to begin at about 10 a.m. EST, Eastern Time, after lower courts ruled that Trump's unprecedented use of 1977 federal law meant for national emergencies to impose the tariffs exceeded his authority. So I'm sure because of the time difference, by close of work today, we'll hear what the court has to say about the tariffs by President Donald Trump, which way it will go, and then to tell the world the powers of President Donald Trump in the United States. Well, that's it for Global News.
All right, thank you so much. In a quick asset class check now, NGX right now, that's the local exchange, that's trading down about 0.02%. Bitcoin officially in the bear markets down 20% from the previous high, $101,000. Dollar index down 0.02%. Ethereum down 5.25%. We'll give you more updates at 1:30 p.m. on Business Incorporated. I'm Ladi Williams. Bye for now.